Assalamualaikum and welcome back everyone to the second half of day 2 of the Digital Ecosystem Week right here at the Malaysia Tech Month 2021. Hope you enjoyed your lunch as we will be serving so much more mouth-watering sessions for all of you. Malaysia, the heart of digital ASEAN, powered by MDEC. Innovate and disrupt your business or somebody else will. Are you ready? Join us as I welcome the next panel session entitled Building a Powerful Corporate Innovation Culture, Digital Adoption versus Venture Capitalism. Moderating this session is Aiza Azreen Ahmad, the Chief Digital Business Officer of Malaysia Digital Economy Corporation, MDEC. Over to you, Aiza.
Thank you, Hasrul. Again, you know, the effervescent Hasrul is always setting the day very, very excitingly for everyone. So if everyone is tuning in, I know 2 o'clock to 3 p.m. is sometimes what I call the graveyard session. You're after lunch and, you know, things are, the eyes are going to get droopy a little bit. But I think what you guys should do, just sit back, relax, because this session, I am gobsmacked that I had a yes from each and every one of the panelists. I will tell you who they are later today, but just mouth-watering to just read out their profile later. You know, I'm reading through their profile and I'm spectacularly feeling inadequate at the moment because each and every one of them brought so much to the table. I have today 3 boys and a girl. I'm kidding. It's actually 3 girls and a boy. So it's going to be fun. And they are not actually someone that I have to labor in terms of their profile. So we'll get back to it. So just to set the context, as what Hasrul put it just now, I'm the Chief Digital Business Officer for MDEC. So the responsibility that I was given when I started the job 6 months ago is to really drive adoption, right? To really drive adoption for the nation, for Malaysia. But prior to that, I came from the industry. So I see firsthand how adoption needs to be driven by venture capitalism. So here, I'm here now. Scarcity is the mother of innovation. We know that. And really in the seat of saying, perhaps we could innovate for more, you know, more bang for a buck. You know, just small input in terms of the financial bit, but big impact. So someone tell me, go think about it, Aiza. So this particular panel is where I'm going to learn, how do we do this together? Is it really a myth that we need to do digital adoption with venture capitalism? Or do we do digital adoption on its own and it can now be on autopilot? And what we do with venture capitalists or venture building is just enhancing the whole entire adoption proposition, a promise for Malaysia. So very quickly, just to set the context right? So VUCA world, we know what is VUCA world. It's volatility, uncertainty, complexity, and ambiguity. So those are big words, right? But it has becoming increasingly fragile for all these organizations. For instance, in 1935, we know firm in the US could expect to spend 99 years in the S&P 500. But by 2005, this average had fallen to a mere 15 years. And it continues to fall. So on average now, on S&P 500 company is now being replaced about once every 2 weeks. And this rate is accelerating. So I think it's very important with corporate innovation, we need to cultivate it. It is key to survive the VUCA world, as I put it. What is the central theme today? Today, we're going to talk about that VUCA, the disruption, like what Hasrul said, disrupt or get disrupted. I know so well of that term because that's where I was from before. We're going to talk about the culture. We're going to talk about mechanics behind creating a corporate innovation culture. Do we dangle the carrot of money for people to change? Or do we give them a purpose? Or we inspire them to change? What are the formulas to do this, right? And what is the ultimate impact of having a strong innovation culture? So to assess why a corporate innovation culture is needed amidst VUCA, how to cultivate it, and what are the impacts to the organization and stakeholders, I'm about to do the honor of introducing our panel session, our panelists here, but I'm not going to labor so much into what they do because each and every one of them has quite an active digital blueprint. But very quickly, we'll start with alphabetical order of things. So Azleen Waris, I've known Azleen for quite a while now. She is the young CFO of my digital creative ventures, no, my creative ventures before, but prior to that, she was in a media company. And right now she is doing the most exciting work, I feel, as the CFO of Jewel Digital Ventures in Berhad. She has 20 years of service in MNCs and the digital ecosystem covering investment, financial services, and retail industry. She's also having a pension, she said, for new businesses, strategic finance, operations, innovation, value creation. And she's also a reader. So, I think one of the things that I share with all the panelists that we are bookworms. So we are always trading books. The next one is Durraini Baharuddin, and I'm going to start this. This lady, young lady here, leading Value Partners Malaysia, has just launched the first in the world Islamic ETF that invests in Sharia compliant in China market. So there you go. That's what she does. So she has over 12 years of experience in the asset management industry. She held various roles from investment management. She set up global offices before, operational rationalization, and business development. So Durraini has done that in her work, and I'm expecting more magic from her. Now we've got Hafizah Shariff, the CFO of Ekuinas National Berhad, and I am absolutely stoked that she's here today. So we know what Ekuinas does. The asset under management is 1 billion, and she has investment. She's overseeing investment across 12 portfolio companies. As part of her role, she also oversees value creation activities at the portfolio companies. So we do have conversations around that before, focusing on finance function transformation and operational improvements. Hafizah, like everyone else here, I'm not sure about Dura, but she's actually a CPA with the Malaysian Institute of Certified Public Accountant. So prior to her current role, she was an Associate Director of Outsourced Investment. She represents her firm in investment committee in various local private equity firms. So I would say, stalk her on her social media, and you'll find out more about her. But last but not the least, the rose among the thorns, I can see him laughing right now, is Reza Razali. So Reza Razali, where do I begin? So Reza has this very interesting role of helping corporate innovate. So he's going to add very fresh perspective to this panel. Reza has helped co-create point of sale system with Petronas, with his point of sale system. Slurp, I think is the name. He has also created the first mobile banking for CIMB. And just recently on 7th July, he launched Kita.Jaga, and we were having this conversation earlier on. He's a game changer. For me, it's a completely game changer. Empathetic financing, that was the term that we coined together just now. And he was about to launch regionally. So he's an a winning serial entrepreneur. Come on. Everybody knows Reza, right? So he had done things in media, software development, mobile games, food and beverage, and invested and worked in the US and also Singapore. So each and every one of them has amazing talent and amazing background and amazing things to say. So the good thing about being a moderator, I get to keep quiet a lot. So I've said my piece for about 10 minutes. I limit myself to talk about 10 minutes. And from here on, you will have questions from me to the panelists. Can we get the panelists out here? Of course, I can see them now, but I'm going to start with the first question. So the first question is to Durraini. Dura, are you there? You good?
Yes, I'm here.
Good. So tell me, Dura, from your perspective, and you've done fund management and also investments, yeah? What do you see in terms of global and domestic trends that seem to drive VUCA and therefore disruption?
Thanks a lot for that question, Aiza. Good afternoon and assalamualaikum to all. Hope everyone is safe and healthy at home. So before I get into that question, it's a very good one. And I think just to recap again for the viewers, what VUCA stands for is volatility, uncertainty, complexity, and ambiguity. Yeah. So this essentially, probably I'm going to step back a little bit and look at how capital markets can explain the situation. So what is, if you ask me, the biggest driver for VUCA is actually happened a long time ago, 20 years ago, which was the age of the internet boom. I suppose some of you who have been around for 20 years or so would have remembered that in early 2000, when Microsoft and the internet just came onto the world stage, that pretty much changed the landscape of capital market. markets. So the internet boom happened in the year 2001, 2002, where there was a big flow of capital into the internet space, and then there was this big buzz, and then there was a correction in the stock market. And then from then on, within less than 10 years, we saw the next global financial crisis, which was also started in the US under the subprime crisis in 2007, which also led to a correction in the market. So why I say this, is that what has happened since the technology boom of the year 2001, 2002 was the shortening of capital markets. So if some of you've had your economics classes before, you open your textbook, theoretically, they will say that market cycle tends to last for 10 years, right? Market will go up for 10 years and it will come down after 10 years. But within the past 2 decades, we have seen that that has actually shortened. So this is why I say that is actually a demonstration of VUCA, which is the internet has led to volatility in markets, in economies, uncertainties, complexity, because how do you value capital markets now that you have such a big fundamental change? So why is, again, capital markets a sign or maybe a demonstration of all of this? Is because capital markets, equity markets typically move ahead of the economy. Back to your economics textbooks, the capital markets will work 6 months in advance. So when you see that the capital markets is moving, it's actually responding to the changes on the ground, but it's reflected in capital markets first. So this is why we say that that is where VUCA came into place and shortened capital markets. So the cycle when it comes to capital markets. So that's globally, Aiza, when we're talking about how the internet has changed things. And again, internet has changed things because for some of you who were not here before the year 2000, there was no internet. You can't Google anything. I recall even learning what Yahoo can do when I was literally in high school, trying to understand what is Yahoo all about, right? So before that, there was no access of information. So investors, capital markets, the layperson on the street will not have the information that we now have just on our phone without actually going to the library, subscribing to books and so forth. So flow of information was very slow. Therefore, only a small group of people can make decisions based on the movement of capital markets. And now it's no longer the case. So now I bring this back to Malaysia because then we get excited. Wow, internet has done that to the US, also to other markets. Why not to Malaysia, right? So then I would say that we have to look at the different ecosystem. The US, if you go back to your history, is a full-fledged capitalist state. Free flow of capital, completely laissez-faire in its approach, profit maximization. You move back to Malaysia, we are in a way a capitalist country, but we have certain forms of control and protectionism, government policies and agenda to be implemented to protect national interests, right? So your ecosystem is a bit different. So even the impact of something as general as the internet and technology that came along with it would be limited. So internet, I know it seems like internet is just a given, right? Internet. So what did internet do to the world was that the consumer spending or consumer usage has actually been adapted to what the internet can provide. So then we got our Blackberries, which then led to our iPhones and iPads and tablets and smart TVs and so forth. So this has changed the way a consumer spends, and consumer is one of the biggest driver of the world economy. So that also, because of this change in internet to technology, has driven this big drive in volatility, uncertainty, complexity, and ambiguity in global markets. In Malaysia, though, our markets are dominated by, I think, Reza, we were talking about this over the weekend in the chat, listed companies in Malaysia, which are largely GLCs, and also non-GLCs, which is largely controlled by family-owned businesses, right? So it's not as open and laissez-faire as in the US. In fact, what is very interesting about Malaysia is that our capital markets is where your funders are your GLCs and non-GLCs alike, listed or not listed, but at the same time, they are also the user of technology, user of all these innovative products or changes that probably MDEC and the team are bringing forward to the forefront. So therefore, it changes the way, I suppose, the impact of technology has had on the entire ecosystem. So probably I'll stop there and pass it back to Aiza.
Yeah, I like what you said, and I want to zero in straight to Reza at this point because yeah, this particular panel has been working overdrive. I think we've been talking about this in the last 2 days, right? Or 3 days. The moment we create the WhatsApp group, there were so many exchanges. I lost track, and in fact, I didn't want to read it because I don't really want to be, coming out with a question. I'm here to facilitate. So Reza, I know the question I have for you was around being the founder of Revolutionary Kita Jaga Kita and Terato Tech. What are your thoughts on the importance of having an innovation culture? But I remember you writing in the WhatsApp group was very, very profound, and Dura has kind of, opened it up already. Is how GLCs, large conglomerates, and organizations, are you really helping out all these startups to help you innovate? Are you actually using them for a discounted price? Because we know that's happening. Or do you really know what you're talking about? Do you know what you're doing? And those are the questions that I have. And I hope Reza, you can help me answer that because you had that background. And then the second bit of it, I would really like to hear from you, from your experience, the importance of having an innovation culture, because quite frankly, these people didn't have any, right? And that hence why they took the startups to come and help them. So Reza, over to you.
Sure, sure. Thank you, Aiza. I think, yeah, have had good discussion in the room over the weekend. But if I may add some from experience, I look at how a lot of the GLCs and a lot of the large corporates in Malaysia, when they said they wanted to undertake innovation, there's actually two different prong, right? That's the CSR prong, and that's the real prong. And with the CSR prong, what you do is you do competition, you do award show, you do dinner, and then you give opportunity for the CEO of the GLC to take photos with the winner, and the winner eventually gets a trip to go to Silicon Valley, and that might be it, right? It's not sustainable. I mean, in terms of for the startups, of course, they get exposure, they get to meet to meet the CEO, which is maybe very elusive, right? They couldn't get elsewhere before. But then after that, what's next, right? It's always the question of what is next. Because, I mean, to be real, I mean, we have had this engagement so many times. You have Green Lane program, you have GLC engagement days with startups. But when we look back at the numbers, when you talk to startup founders in Malaysia, what are their experience for all this engagement with GLCs? They are confused, right? They are confused because the guys who run the innovation unit are not usually able to push through this innovative stuff to the business unit, right? They will be, okay, this is cool startup, but no, this doesn't fit our business. So even that cool innovation that wants something gets nowhere within the ecosystem. So I think we need to address the main thing in the room in which you want to create an ecosystem which is self-sustaining. So whenever you do program with startup, I think startups don't need CSR. We don't need the PR. Maybe the CEO of the GLC needs the PR, but we don't. What we need is the dry powder to move the business forward, right? So if there's an opportunity for projects, we want projects, right? And if you like what we do, you want POC. The POC, normally what happened, right? These startups can only afford nasi campur at the moment for maybe 2-3 months, but then you're expected to do the proof of concept for free, right? With no, and then once you do the POC, it's successful, and then suddenly you have a bunch of bronze management consultant coming in and had to evaluate you, right? And you being a startup, I don't think you'll be able to maneuver this, right? You don't have the financial capabilities. You're not going to be able to respond to all the queries. And eventually, although you might pass the POC, your whatever you work on, the recommendation from the consultant would be not a go ahead because these are the red flag with startups. Right? Although they might have a good innovation, but the rest of the other area, they just don't qualify, right? So we need to look into that. How GLCs procure their services, how GLCs incubate this startup. So we have to relook at this, right? I think the pandemic has proven whenever shit hit the fence, who you have are not the the blonde management consultants anymore. You need to depend on local startups to be able to help out on the ground, right? So I think from our end, we have proven that when the white flag campaign took off, we, local startup itself, a few of us, myself, even Fukaha from Katsana, and then Amran from Wahda, we all work together. Even we worked together with GoGet recently. So we all work together and solve local problems. None of the foreign management consultant are going to do that for you. So I think we have to look at, back to what I'm going to say is, we have to look at how all this program, if you are going to do a program to help startups, to innovate startup, it has to be more than a CSR. It needs to be something that provides dry powder to the startups at the end of the day, right? I think this award, this photo ops with the CEO, those has to go lah.
Yeah, I agree with you, because I think what is really important, right, is the whole entire, you want innovation on steroids. Betul tak? Everybody wants innovation on steroids. That's exactly what everybody wants. And then they go like, oh, I can't actually do it internally because I've got lots and lots of layer that I need to leap over. But if the startups, they can come, they're agile and things like that. But I still haven't seen a corporate GLCs or MNCs that have the right formula in making sure it's sustainable, like what Reza said just now, right? It has to be sustainable. It has to be something that is longevity, and it's modularity as well. You keep building on that. And Dura gave a fantastic overview that internet kind of cut short the capital market cycle. So really, the ecosystem is getting extremely exciting, but we seem to deploy the same formula like what Reza said, PR, take a photo and stuff like that. So I'm not going to label into it. Like I said, I promise I'm not going to say too much here. But with that,
Aiza, can I chip in here?
Please,
then?
actually, it's you. You are the one that I wanted to talk to. Go ahead.
Yeah, I mean, from my point of view, it's a misalignment of expectation from both the MNCs or the GLCs as well as the startup founders. I think that's the key thing that you need to address first. What's the expectation? Examples of GLC investing into startups is what we call now typically a corporate venture capital, meaning these GLCs actually set up their own venture funds to actually invest into new industries, for example, or facilities of the future. Petronas recently had one where they launched their Petronas Ventures, and they are looking into facilities of futures, future of energy. So, and the main reason for that is they want the industry know-how, they want the market knowledge that will actually feed into their overall strategic view. So, of course, if you know that that's the expectation, you would as a founder, you would imagine that it's either you get absorbed and or perhaps spin off as an umbrella within that GLC itself. But if it's not something that you want, then perhaps going to GLCs for funding is not the answer. Perhaps going to companies like angel investors or those that actually invest in startups, that should be your key go-to rather than to MNCs, because rightfully, like Reza said, some would start off as CSR, but really it might not 100% be for PR. It's actually it's a whole, they are looking at it as a whole cycle. So like for Ekuinas, for example, we focus on growth capital because we don't want to overlap into other agencies that look into startup like MAFCAPs or PUNB that gives seed capital, right? So we don't want to overlap into that. So we focus on growth companies which have 3 to 4 years track record already. But from our perspective, helping startups would be our CSR because it eventually will fit. We hope it will eventually fit into where we are. But because we are not corporate venture capital, we are pure PE play. When we invest, it's really to value create that company, to work together with the founder, to grow that company together, and then we exit, we part ways. So if that is your goal and what you want, so that would be a better better place for you to get capital rather than go to GLC, because obviously if it works for them, it's a strategic investment for them. They're going to strategically acquire you if it works and fit into their overall growth.
Yeah, but Fiza, let me just bring things into perspective. And where I am in MDEC, you know, sometimes we hear from SMEs or startups, actually startups and SMEs, they're like, we're trying to look for something here. We are like trying, and most times it's funding, yeah? So funding is either the grant. So I'm saying this with a lot of love, and Reza knows this. We do not want to create a tribe of grant-entrepreneurs, always falling back on grants. So we need to find a way to actually mobilize the whole entire ecosystem with better funding. It's not necessarily easy, like in your case, Ekuinas, right? I mean, you look at 3 to 4 years and it's a PE play. And with that, you kind of pushed away literally 60% potential, because there's startups, there are SMEs that haven't even gotten there. For the ones that's over 5 years, they've got funding from, it's not funding, they've got financing from the banks. We know this. I mean, that's where I was from before, right? But the ones that are coming out, like what Reza says, sometimes die a premature death, not because of anything else. Yeah, the PR is one thing, but it's really about knowing where to find and fitting in, aligning what they want to do with the likes of Ekuinas, the likes of Axiata, the likes of Petronas, and the likes of PNB, right? So on that note, with your permission, Hafizah, I want to kind of get some nuggets from Azleen, because Azleen's background is fairly interesting, actually very interesting. So Azleen, what you do is that you work from a funding venture capital. You tell me if I'm doing this wrong later. With my creative ventures and focusing on creative industry. That is a challenge. But now you are in a venture building subsidiary of PNB, which to me, pardon my ignorance, I've always seen it as Amanah Saham Malaysia or Berhad, and it's kind of traditional, right? But you're doing something exciting over there, which is coming up with a digital wealth management platform. Drawing upon what Dura said, shortening the cycle of capital markets, what Reza is saying, stop the PR, just give us what we can do to sustain ourselves and grow, because he is growing to another region without the help of, you know, other venture capital and also funding, but I'm sure it would be better for him to scale up if he had that chance. And Fiza saying that, hey, you know what, you need to know exactly what you want and align that to the companies or the organization that's going to provide you with the funding or the fuel to grow. So Azleen, I know I have set a question for you, but because this is so interesting, I'm not going to even ask you about the trend question that I intended to ask. I want to ask you the question about your experience pivoting and switching from where you're at and now running a startup within the GLC. Over to you.
Okay.
Yeah.
Thank you, Aiza. Thank you, everyone. Assalamualaikum, everyone. Hope that everyone is safe and healthy, right? In this current pandemic time. So where we are now, Jewel Digital Ventures, we are really, you can call ourselves an offshoot rather than a startup, because we're really backed by our mothership, right? PNB Kemulan Malaysia Berhad. So what was actually mentioned by Fiza earlier on, it is really a strategic alignment when it comes to actually building innovation with GLCs. So what we do now in Jewel is we are pretty much a venture build and also a venture invest company. We started off as an investment holding company with basically focusing on product, right? We do have investee which is called Raise Invest Malaysia. That is a robo-advisor with a value prop of spare change investment. So the whole, when it comes to investing, value investing, actually just to answer also Reza, it is really the strategic focus or long-term view of the mothership. If mothership is actually in the industry of, for us, in our case, actually asset management, that is where we want to actually value create, and that is actually what would be the long-term focus of for PNB. But it doesn't stop us to actually just looking at asset management, because now as asset management financial services, I mean, digital technology is a facilitation, right? And it's plethora out there. There's a lot of things that has opened up possible opportunities that we are actually even looking at now. For example, as we are actually servicing customer, we would need to look into data, right? Analytics, warehousing, and actually how to use this data to actually improve the engagement and the value add to our investors. So for example, it's something that I think very passionate to work in now, because I mean, who doesn't have ASMB account, right? I mean, I've had ASMB account since I was 12, right? And for 30 years, I mean, you can actually guess how old I am now, but for 30 years, I've already had ASMB account, and as a mother now, for all my kids have ASMB account, right? So with the pandemic, it has really disconnected our customers, as the direct interaction has always been on ground, right? We have our branches, we have our agent branches to actually interact with our investors, and we have started digital enablement sometime 2018, 2019 with introduction of the portal and the app, and it's an ongoing improvement every now and then, right? So because technology, it changes, right? So even unit of economics changes, so there's a lot of products that we will need to actually listen to our customers to actually improve an engagement. So with the impending licenses of digital banking, all these potential licenses coming up, we know that the intention is actually to serve underserved and underbanked, right? There is an under-penetrated market out there, and how do actually PNB help value create as part of our asset management or fund management capability. Then there's a possible partnership or collaboration that we can actually do, right? So when is a financial services as of PNB, I think the question that was given to me, how do you strike balance of BAU and innovation, right? So banks, asset management, we are very regulated business industry, in the sense that we have to actually balance up business risk and also execution to speed, right? Other than alignment to mothership. So we have to be very careful in the sense that there are things, governance that we have to keep in mind when we actually bring in products. So by having an outfit such as us, we feel that there is that flexibility there, in the sense that we are able to also interact. Actually, it's a co-creation with the business people. It's a co-creation work with ASMB, PNB, and we are thankful enough because our senior leadership members, our senior leadership are very, they have the digital fitness from the top. So when there is that alignment, it makes the whole value chain of transformation actually run smoothly. But it doesn't stop there, because for us, transformation also has to have that innovation angle to it, right? So who does the innovation and thinking big, talking to partners, run iteration, run POCs, right? So there has to be a growth engine that does that. So we behave in that way. Looking out with what product is out there, we could also potentially invest, but the primarily focus at the moment now is really value creating the digital channels of ASMB, PNB. But it could be something that we could look into the next year or future years to actually enlarge our digital presence, right? But it's really it's how to say, starting what I'm trying to say is starting a startup now is easy because there is already Amazon Web Services, right? So startups can just start or start a company with just a credit card and laptop, as compared to before. You have to have all of the servers, you have to buy all these codes, right? So it behaves that way in terms of financial services, right? So there are areas that you can actually work with fintech, and we hope to actually do that because the fintech community is agile. They are very open to actually explore.
Azreen, I'm going to ask you and Reza this question. Okay, for 5 minutes that we have for this segment, because we need to move to the other segment, I'm going to ask this question. Reza, had it been different, right? Had it been different, say everything is open for anyone to do anything. Capital market, cycle, shorter. Investing, funding, no criteria. Had it been different, Reza, would you be a startup or offshoot? Meaning, would you take Azleen's place? And Azleen, would you take Reza's place? And Dura, if that happens, where would you put your money? And also Hafizah, where would you put your money in terms of these two structure way of doing innovation? So tell me, I might stop you if it's not 5 minutes. So tell me, which one would you actually do? I'll start with Reza. Go.
Yeah, I think it's clear, right? One of the only reason why I did startup, it was because after I came back from the US, I just couldn't find a job here, right? So it's either I did my own thing or I would be unemployed. So that's the reason. But having been doing this, that was the starting point. But having been doing this for the last 13, 14 years, I think having been looking at the corporate backend and things like that, I enjoy doing what I do. I wouldn't trade it for anything else. I enjoy not having to take orders from anyone, so that's what I enjoy. So just that. I wouldn't change it for anything. As for my end, right? In fact, as for our business, we no longer have venture capitalists on our cap table. I enjoy that, so we don't have to send monthly reports to anyone. We can decide how I run my business. We can decide whatever we want to do. So I might be an anomaly in the space as well, just because I just enjoy the freedom to be able to do what I want, how I want it, without direction from anyone. So that's I think that's just.
You'll stay where you are. What about you, Azleen? Because after this, we're gonna ask the women with the money, where they put their money. And Azleen, I know this is a provocative question, but you probably can answer it from your experience as a startup owner before as well.
Okay, so as part of the management in a fund that was actually helping creative industry, I think what we had to help was actually it's really funding with all these SMEs and creative industry, right? But rather than just financing, it has got to be some sort of a developmental role for us, in the sense that we actually do guide them in how to actually pitch for funds, how do you do cash flow, and it's really paper value, right? So I think I think government has already has all of these agencies in place that actually work with for the SMEs. Coming from my own startup, I think at that point in time, the experience in corporate did give me that foundation to actually run my own company at my own discipline, right? Discipline that has also led the corporate. So when you have
you stay in startup, or you'll be part of the offshoot, because I think these two are raring to answer the question.
Okay, startup, definitely it's a 24/7, and it's really it's I have to say it's an experience for me, because the pressure is always there, because at one end you have to pay off all your salaries and all that, at the same time growing the business. So there is no structure in your work. For me, it's at the moment now it's really finance, strategy, and marketing, right? But in a startup, you have to do everything A to Z, right? So,
I'm hearing now. Reza wants to be in startup. You're still saying that maybe startup, maybe corporate offshoot. But
I'm fortunate, Aiza, where I am now, because I know how both take, right? So I know how to actually maneuver, and you have to manage stakeholders, right? So you have to actually make sure that whatever you do is aligned to them.
Can I get you to pause there? Because I just want to ask Hafizah and Dura, where will you put your money, guys, before we go to the next segment?
Okay, maybe I'll just go quickly first. I mean, Value Partners is new in Malaysia, so we are a startup in Malaysia, even though we are supported by mothership great company in Hong Kong. So in a sense that we understand, that I would understand where Azleen and Reza are coming from in terms of startup culture, which is probably something I'll talk about. But I would say this: in the end of the day, people will go to where businesses are. So what good businesses are is still where there's good revenue, there's a captive market, market, there is market share, there's good governance, there's a good team, and there's an actual value proposition for this investment, right? And I think this is where I want to reiterate what Hafizah said just now, which is misaligned expectations, right? As a startup, coming from a startup, you must know that what you are you must know what is it that your funder wants to fund, because what your funder puts money in must also align with their core businesses. Back to Azreen said, asset management in PNB. PNB is probably, just from my point of view, would probably not want to fund, say, a distribution platform for kelapa sawit. I don't know. Maybe they won't do that because it's not core to asset management, but they will probably go into robo. So as a startup founder or people from this startup scene, they need to also understand, you want the capital from your funder, potential funders. You must understand what is their motivation, and then you get that thing aligned. And the thing is, right, fundraising is the most important part of a startup, I would say, even for myself and value partners, right? So if what you are doing doesn't align with what the funders in your ecosystem can or needs, then what is really the point of doing it? Then you'll have to go to another ecosystem, Silicon Valley, and tap into the funding potential there. So I would say, in the end of the day, it has to be a good business that drives capital into it.
Hafizah, you got 5 minutes. Sorry, you've got about 2 minutes. And I tell you why I asked that question, because we are going into another segment, which is also fun. I'll tell you why I asked that question. So Hafizah, you go.
Well, to me, it's actually like finding a life partner. It is essentially a long partnership. So we have a lot. I mean, our main portfolio companies are all owned, entrepreneur run and owner operated. A family business, for example, or I've set this up for so many years. So obviously it's their baby. So we respect that. We cannot function without them also being part of the key management team. So what we call team and race. So we understand where Reza is coming from. It's my baby. I know this business better than you. So why are these blonde management as what he called, right, coming in to tell me what to do? But essentially it come back to what I said earlier. It's where our alignment is the same. So when you have, for example, a PE firm coming in, we typically take a stake in it because we want to be aligned with the shareholders. The founders and us must be aligned in where we want to go. But we completely respect that you know your business best. Where we come in is to help you in where basically complement you, maybe in terms of helping you more a strategic view, supporting you in terms of making things that sometimes this owner, they are passionate about what they want to do, but they don't want to take care of the back office. So that's where we come in. So it's a partnership, and you have to woo these people. It cannot happen overnight. You have to really understand and believe in each other that we are all working towards the same goal. So that's my 2 minutes view.
Thank you. There's a reason why I asked that question, because I want to hear from Reza, and I'm glad that he answered it that way, that he's okay with staying where he is. But Reza, I was using you as an example to ensure that the SME gets a lot of things out of this session. Yes, you can stay where you're at, but also looking at another perspective, which Azleen so aptly put it. Aiza, I've got the best of both worlds, but I'm also very fortunate where I am. So I like what you said, Azleen, meaning that there's really no formula to it. It's really what you want at that point in time. Durraini came in and said, as long as you have this, and this, yes, you can get the money. And then Hafizah came in and said, it's about finding a life partner. So for all the SMEs and startups listening out there, there are help. If you can't really find where to go, there are developmental agency. This is not a hard sell on MDEC, because MDEC is not the only one doing this, but definitely we are trying to do this. And Reza knows this. The moment he launched Kita Jaga Kita, I kind of gave him a call and said, come, let's talk about this. But I think that proactive action needs to be more, even now, more so than ever, because you really don't waste your time traveling. You can use your time to start calling people and giving them hope that we want to help. There are a lot of challenges. So I'm closing this particular segment and going into another segment, just call to action for some startups and SMEs here. Please listen to this again and get all the little nuggets from Reza, Azleen, Hafizah, and also Dura, and really chat out how you want to scale up your business. Because you've got really the greatest minds, at least to me, in this room today to tell you how it's like, right? So I'm going to go to the next question or the next segment. And I think we've got about 10 minutes, and I'm probably allowing everyone about 5 minutes. Sorry if I need to stop you, but I would like to start with Reza, because you're like literally an outlier here. So you have an experience in creating innovation within a corporate, right? But you also, I would say, create an innovation culture at Terato Tech, right? So I've been watching you for many, many years now. We've known each other for more than 5 years now. So it's interesting to see what you are doing, but I would like to know if your approaches were different. Then I'll go to the ladies. Over to you, Reza.
Yeah, I think, of course, we've done work with corporate, so we've also done work internally. But I think even to do innovation in corporate, I think you always have to find the right partners to work with. I think that's important, right? You have to ensure that at least they have a clear goals and direction of what they want to do, and then they also have team members who are really passionate about the product as well. For example, right? For example, one of the most recent corporate work we did at Trato is we did the Air Selangor app, right? So before this, Air Selangor had nothing but just a Twitter account to update people if they do not have bekalan air. So we built the app. They started with just a way to update if your area has no bekalan air. It started as that. And then the team decided, hey, we want to make payment. Hey, we want to have the ability to have chatbots in the app. And now these days, what we're working with them is they wanted to look at the ability to see where are the non-revenue water on the map, where is the leakage happening, right? So it started as a very simple. Initially, we just wanted to solve the problem of announcing the bekalan tak ada bekalan air. That's how it started. But then because the corporate itself took it as an exercise to be able to create a product, and they have a excellent product manager in there, and we are collaborative, and that's why we're able to come up with a fairly good product. This is the highest rated utility app in Malaysia. So we enjoy working with that kind of client. But also you have clients in which you build something and they think they know more than you on the app building side, right? So that becomes challenging. Sometimes we had an experience in which to build something fairly simple, if the CEO changed and then suddenly the app changes direction, right? That's also difficult, because the app, although you have to follow mandate from the top, right? I think in terms of the product development itself, it has to come from the business user and the product team itself. So in corporate, I think it's very important to have a good product team in place before you start. You wanted to do some innovation, that's very important, have some good people there. But internally, as a small business, of course, I mean, being a small business, it's very easy for us to innovate. Instead, the kitajaga.co, we dream it up on the 5th, which is on the 4th, which is Friday. We launch it on the 7th, which is on the Monday. And by the 8th, we have about 500,000 Malaysians visiting the site. And till date, we have about 2,500 Malaysians raising a white flag, looking for help every single day. So I think, I think that it's two different cultures, right? But then in terms of a startup as well, we enjoy both. But what's important is actually to work with people, which enables you to improve the product consistently. Sometimes when you work with large corporate, you just build a product and the product stay what it is, because they just don't have the budget to add new features to it. So the product will just die off, right? So
yeah, I know too well with what you just said, because sometimes building an app in a corporate environment, the marketing budget seems to exceed the product development budget. And I think that's completely lopsided. And I like what you just said just now. So I'm going to go to Dura. So Dura, I know this question is about your experience for innovation culture, but what the uniqueness of Terato Tech and Reza is that they are able to commercialize from the simplest idea, right? Update Twitter, tak ada bekalan air, and now it becomes an app. So in your case, right, the innovation culture with what Reza has demonstrated or told us, what would be your take around when Is culture important before you make that call to invest? Do you ask those questions at the very outset, or you just go, close your eyes, invest, and off you go? Does that make sense, the question? Yeah.
I'll answer it two ways. Yeah, one as an investor, I would say first and foremost, what's important is actually leadership above and beyond anything else, because leadership sets the tone of corporate culture. So you can't really say that. It's. I would say that leadership is where it sets the tone. It's like a family, right? Back to what Aiza said. If the family has strong foundations, then it trickles down, or the parents have strong foundations, it trickles down to the other family members. So that's number one. And then I will probably take it back to how Value Partners in Malaysia has done it, because I think it's a bit more relatable. So the product we just launched, Aiza, is the first in the world ETF that invests in China A Sharia stocks. And I think this is very important because ETF is one of the biggest source of capitals in the world. Like ETF is one of the biggest investable instruments in the world. About $8 trillion is in it. But in Malaysia, we only have 18 ETFs, and it's not even 2 billion ringgit. So I'm telling you, this is where where is that gap? Why is it flourishing in other jurisdictions but not in ours? So this is where Value Partners in Malaysia has attempted to innovate how processes are. So within a very traditional business, which is asset management, launching products, we innovate how things are done so that we can launch a product that is efficient and more relevant to investors. Efficient leads to lower costs. And lower cost is what investors now, like Azleen mentioned just now, savings rate has gone down and we need place to park our money. We can't afford to be paying unit trust agent 2%, 5% anymore. So what can we do? So what leads to that is, again, from my own experience in Value Partners Malaysia, is leadership. Now, in Malaysia, we are different from Hong Kong. In Hong Kong, we're well established, close to 300 people. We have award-winning funds for 30 years. In Malaysia, yeah, we have a Hong Kong track record, but we don't have much going on here. So it's really leadership that enables us, which, alhamdulillah, it's my point, I hope, in making sure that we can do or execute the things that we need to do to achieve operational optimization, to produce a product that is relevant and efficient, and also to respond to what the market wants. So that's why I say it goes back to leadership in order to calculate this, and be it in a startup, like where Reza is from, or Value Partners, which is kind of like it's a big company actually. As long as the leadership sets the right tone, with the right tone, then you naturally will choose the right people, which I do have in my team, which are agile and flexible and very sharp, very responsive. Then that is, I suppose, the recipe to making it, be it in a startup or even in a big organization.
Thank you, Dura. With that question, I'm going to ask Azleen before I go to Hafizah, right? So Lynn, in 3 minutes, yeah, you, I know, is running a very, you run your outfit startup-like, right? You've got only a few people reporting to you, but somehow you are creating magic over there. So this is a bit of a trick question, right? So Dura is going to invest in leadership. Can you share with everyone that's listening, the SME, what does it take? What does it take for you as a leadership to kind of attract investments on you? So put aside that you are in Jewel, but if you're running Jewel as your own company, what kind of leadership quality do you think, or you have, that you want to share with them, that people will put money on you? Go.
Okay, so basically it's not just leadership that I feel is important, it's also the mindset of the team. So when you are fixed, you are on a fixed mindset, basically you're not flexible and you're not going to change, right? So when you have a growth mindset, then it allows actually all the team members to actually, do teamwork, to actually work into learn and unlearn, right? So in JDB, we actually look for people with a passion and desire to actually get things done. So it's not really much about resume, because for us, we feel that resume doesn't really tell us much about the inner hunger of the talents, right? So we create ways to actually foster alternative views, constructive criticism, and we're open to actually play devil's advocate and take opposing viewpoints, right? So in our culture, in JDB as compared to the PMB mothership, it's we of course we do have the alignment, but we work on an agile methodology, whereas typical corporate is really waterfall, right? So for us, we don't from the onset have business request document to actually kickstart a product, right? We iterate, so we improve, and we come up with adaptive product at the end of the day that the customer wants, right? And we do it together with ASMB. So I think in terms of innovation in an organization, you do have to have that alignment in terms of agility and also flexibility, as well as making sure that you are thinking of governance and internal controls. And I just wanted to also share one very important common pitfall for innovation, right? It is really about making sure that you have a proper planning from the start, because in digital or innovation, there is no clear path of planning, right? So what you have to do is you have to start with a broad plan first, and then from there you actually improve, right? So that's one of the I feel that by focusing too much on planning and you're not executing, companies just get obsessed with creating a perfect plan, right? Where there is actually no perfect plan for innovation. You just have to hack it and just do it, right?
On that note,
yeah.
I know plan and execution need to exist together, and paralysis and analysis also come into play. So I'm going to go to Hafizah. Hafizah, great things that they are coming to me and saying. So you've got 3 minutes to tell me this: passion, mindset, agile, teamwork, corporate culture, leadership, foster alternative views, devil's advocate. I'm taking notes, agility, and then with what Reza has said, I want to be in startup. Those things, is it clear to you with everyone that comes to you for funding? And if it's not, tell us, how do we improve that for corporate Malaysia, startup Malaysia, SME Malaysia?
I think from where we are coming from, of course, like Dura said, the business case must be there. So, and of course, after that, it's the leadership, like Dura said, and also the team. So at the end of the day, we are really investing in people.
Yeah.
So whatever companies, whatever business that we look at, people is the fundamental thing that must be, we also look at the people. So we must make sure how strong is the management team. Are they going to stay? Because they need to be, as I said, they are the experts. So we have full respect to the founders and owners of this company. So it's all of that. I totally agree. It's the leadership, the people, and also what we also find important is entrepreneurial spirit.
Yeah.
So the leaders, the management team will have your typical business mindset, where you want to squeeze as much profit as possible, cut costs as much as possible. But at the end of the day, you must not lose your entrepreneurial spirit, because without that, there's no innovation. So it's important that you find leaders and team that have this balance, where they really they know that at the end of the day it's all about bottom line, but at the same time they are not afraid of doing difficult trade-offs when the time comes. So you need to have that entrepreneurial, they're not afraid of taking risks.
My hope for corporate Malaysia, organization Malaysia, venture capitalist Malaysia is to, before you go through the criteria and start evaluating, the time that you take, Reza would probably just churn out like 4 apps.
Yeah.
You know what I mean?
Yes,
so that needs to change. Hence why, Reza, thank you so much for answering the question by saying, thought about it on the 4th, launch it on the 7th. So my call to action for corporate and MNCs and funding partners, yes, you go learn from these ladies. They are saying the right things here. They are offering their nuggets, their experience, how they do things. But always be cognizant of the fact that while you go through that, Reza and the gang is churning out 4 apps. So ladies, and gentlemen, I am cognizant of the time because I know all of you are very busy and you took out like an hour of the day that you're busy to come and do this with me. I would not summarize this because I will not do justice to summarizing what you've just said, but I did summarize the first one segment, but the second one is really about understanding how we move the needle. With that, everybody, I thank you so much. Reza, Razali, you're my idol. You know how much I respect you for the things that you do. I've known you for a long time. I can see you growing from strength to strength. Azleen, every single day with you is learning something new. I watch in awe how you manage JDV with just a couple of people. Hafizah, you know, I know for a fact that your mind around finance and your mind around financial transformation is second to none. We will be very, very happy to have you on board again to talk to us about what you do in the financial transformation. And Dura, where do I begin? The ETF that you launched single-handedly as the managing director of Value Partners. Like I said,
I'm MCO, no less.
during MCO, no less. So I'm feeling absolutely inadequate here, spectacularly under-resourced and underutilized. But with that, ladies and gentlemen, thank you so much for coming on this with me. And I bid you to stay safe, social distancing, and we shall catch up one day again for another panel, I hope. And otherwise, let's just have teh tarik when this madness is over. With that, Assalamualaikum warahmatullahi wabarakatuh. Thank you everyone for listening. And please give a clap to all the panels.
Thank you for having us.
Thank you so
Bye,
much.
everybody.
Assalamualaikum.
Salam.
Thank you, Aiza, and that spectacularly fun discussion on digital adoption, venture capitalism with our esteemed, talented panelists. Thank you again. We will now be moving on to our next session of the day. It will begin very shortly. So do click join session and also complete the survey at the end of each session for us to strive to continuously serve you better. See you in a bit.